following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Option Block, and I hope all of our listeners out there are faring well and surviving these whipsaw up, whipsaw down, gently rallying up markets that we're having these days. It is certainly boon times to be an options trader. That much is certain. My name is Mark Longo from the OptionsInsider.com, as well as the old Options Insider Radio Network. And I am joined today by a robust roundtable of panelists, starting off with Mr. Bouffant, none other than Mr. Tim Navabi from Options Express. And Mr. Tinov, how are you doing today, sir?
I'm doing very good. Thank you very much. I'm enjoying the summer. Nice August we had. Nice weekend we had. The weather got cooler, and it was really very, very pleasant outside.
Yeah, it was unseasonably cool here, where it was in the 60s and 70s all of a sudden. It makes you kind of wonder. It was in the 60s up until mid-June, and then we had a couple months of decent summer weather, and then hopefully if this weather keeps up, then we had exactly 2 months of good weather in Chicago this year.
Yeah,
so hopefully
totally.
We'll get a little bit longer. I'm not averse to it cooling off, but I wouldn't mind it staying above 70 for a little while longer, at least out here. And then Uncle Mike, the man from the mountains himself, a listener favorite, if I may say so myself. How are you doing today, sir?
Oh, doing well. Had a great weekend. Got to take my boy out to the Sycamore Speedway this past weekend for some clay track racing, and it was a good time. It was a good father-son bonding event. It was a good time. So excited to be back at it this week, as always.
And listeners, we will also be joined in progress in the show by good old Mark Sebastian, a.k.a. the Seabass, as well as a special guest that he brought along for your listening pleasure. So stay tuned for that. And with that, we're going to roll right into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. This is indeed the portion of the show where we discuss what's been moving up the markets and lighting up the tape today in the broad indices and across the broad spectrum. And, of course, it was yet another green day on the street today, so the bloodletting, the tupocalypse, as it were, that we've been seeing in recent sessions has halted, at least for the time being. The S&P closed up 25 handles to 1204.49. The Dow closed up 213 to 11,482. The good old NASDAQ up 47 points to 2555, and the ever inscrutable VIX cash closed down 4.49 points to 31.87. And there was a lot moving the old markets today, but I think the big driver, or at least in the tech side anyway, was, of course, Google's acquisition of the Motorola spinoff, the Motorola Mobility subsection, or the handset part of that company, or as a lot of people refer to it, the good stuff of Motorola, what was actually making money over there as opposed to the rest of that company.
And you're wondering why, remember we were talking last week that was the only company that was up, and it was in our unusual option activity and everything?
Exactly. We've been watching it for a while now. We've actually been trading it quite a bit just because it was the only thing in a sea of red that was hovering to the upside. The Dow is down 500, S&P's down 40, 50 handles. Everything's off 3 to 5%. And MMI is up there with silver and gold as one of the only things up on the day. So do you think the word leaked out ahead of time?
That'd be like S&P leaking that they were going to downgrade U.S. debt. Would never happen.
Never happened in a million years. That was one of those ones where it was so odd, and it kind of screamed out at you as you were watching it that something is going on out here in MMI, that this little name should not be able to hold the rest of the market at bay, whereas other names are being slammed right and left.
Well, that's why I'm looking at Avon. There's been, as this stock has been getting hammered, there's been a ton of call buying in it. So I'm wondering whether Mary Kay will come in and buy them up. But yeah, we're actually above the downgrade level now, which makes sense. I mean, if you think about it, as we've said many a time, that downgrade, rates are lower than where they were before the downgrade. All right, that has little effect. For the first time, we've actually lowered debt, which is nobody believed anything that S&P had to say. It was a completely emotional sell-off. And, I think the trouble out of Europe is the only thing that's going to derail things right now. And that's what people should be worried about. I wouldn't be listening to a single thing S&P has to say. They just completely outed themselves as arrogant, not really knowing what they're talking about. And although they do develop great products, don't want to knock them there. But, their debt rating system, something was just off there that they did this. And I'm not saying that the market belongs back at 1370, but 1200, 1250, that doesn't sound that bad to me. If you look at, I don't, but if you do look at multiples and that we're going to be stagnant, but I don't think we're going to recession. 1250 sounds okay to me. I can live with that number.
I know we've been talking on recent shows that you've been stacking up to the downside in VIX and VXX. Have you been adding that position since then, or are you still trading looking for more downside in VIX here?
I have rolled out of all of my VIX hedge. I rolled out of all my VIX hedge after we popped, and took all the proceeds and bought XIV. So that tells you what I think.
Well, we are missing Uncle Mike right now. He is having some, the Skype gods are not smiling upon him, let's just say. So, Mr. Navabi, would you like to take over for him with our commodity rundown, sir?
Sure. Crude oil we had up over about 2.7%. That's what I've got right now. Coffee was up there as well, over 2%. Some of the other numbers, silver was up close to 1.5%. Then we also have gold that was up just over 1% there. And as far as the grains, wheat over 1%, corn was up almost 1%. So those were the commodity prices.
Where did GVZ/GVX close? Because it was ridiculous. I saw it ridiculously high last week, and it was one of those things where I pointed out to my traders, I'm like, even though the markets are really, really wide, if you can get anything close to mid price, it was a little bit of a no-brainer. Where's that trading now?
GDX closed at 60.90. That was up $1.68. And the GDXJ, that closed up 1.03 at 36.03.
GVZ did?
Oh, GDZ. Sorry. GVZ closed at 24.81. That was down $1.10.
Yeah, so that's been off. That got up over 33. When that thing is peaked out, that's been a pretty good indicator for gold taken a dive, but actually it seems to be on the rally as it continues to touch all-time highs. Gold is, you know what? I get just about everything. I don't get gold. For it to be more expensive than platinum is insane. I mean, that's just insanity. It has no business being that pricey. And, you know, as long as that trade is there, that's one I would be really looking to do. If you got the funds to put up with that, you're going to be fine.
Well, we are just joined back. The Skype gods have allowed Uncle Mike to return to the program, and I imagine you have a vested interest in defending that gold price here, sir, given that you are such a metals bull these days.
What reason does it have to go down besides it being priced so high? I guess that's my question on gold right now.
Well, I mean, it's just, what reason does it have to be that expensive? And it's not even that it's gotten to the point where there are better alternatives to buy to park money in than gold, i.e. silver, platinum, oil. Buying barrels of oil to me seems like a safer bet with your money than owning gold right here, because the risks to the downside are just, and I don't mean long-term, but intermediate to short-term risks of a major correction in gold are, if you look at all the different markets, I would say probably gold and bonds are the two next major sell-offs that we get relative to everything else out there. Maybe it's some of the other commodities, but you know, long term it probably does go to 2,000, but short, intermediate term, there are better places to put your money.
Well, I mean, I can see where you're coming from on that. I guess just the reason that I'm actually still, and I'm not a short-term person, as you guys all well know, but I'm actually a little bit on the bullish fence, even in the short term for gold right now, just because of the fact that we've had a pullback the last week, and it's coming on pretty strong again today. We're up almost 2% today in GLD. If we break new all-time highs again, I guess that's my catalyst, or that's my point to where I'd become even more of a short-term bull on gold if we continue to make new highs. And the reason being, when things, not necessarily just stocks, but when anything continues to make new highs, there's a lot of reason to be bullish. Now, typically the trader in you, Mark, and I understand that, the trader always thinks, well, what's everybody doing right now? They're buying. Then we need to be selling. All right, what's everybody doing? They're selling. We need to be buying. And so, you know, I can kind of see where you're coming from on that, but this is uncharted waters right now for gold. This isn't just a new tech stock. This is gold we're talking about that's making new highs, and this is one to where you could have continued to make the same argument for it all the way since gold broke 1,000.
Well, you know, but there were certain points when it was breaking 1,000. Some of this has been really logical. I mean, long-term deterioration of currency, there's good arguments for long-term bullishness. But right now, gold reminds me of that shady guy in a bar offering you a free drink. Yeah, you know what? It's a free drink, and I'm sure he's nice, but do you really want to risk it? I don't, you know, because I think gold's the type of thing where you take that free drink, you wake up the next morning, and you're in a hotel where you don't know where you are, and with a major hangover and a bad case of a rash. That's where I think gold is right now.
Well, I guess I kind of think in terms of oil. Oil then makes it the guy that you see on the outside the bar in the alley telling you something along the lines of smoke this or do something along those lines, just because of the fact that if we have a bullish run on oil right now, we have some technical resistance levels coming up, and I think we're going to have a bull market in stocks in order for oil to come up. Now, who knows? Maybe we could be at the low right now, but I personally think that oil, if I had a gun to my head and I had to pick, and full disclosure, I have no positions in oil right now, so I'm not putting my money where my mouth is. But if I did have a gun to my head for oil right now, I'd rather be short than long oil.
Interesting, and that's kind of a fundamental and economic thought. China's slowing down, U.S. is not picking up, Europe's not picking up as much as people expect.
Yeah, along those lines, and technically speaking. So I guess what we need to do then after the show, we'll have a gentleman's wager on this.
Sure, absolutely. So,
Uncle Mike, don't let Sebastian drag you down into his uncomfortable analogy realm, because it's a long way to the bottom of that particular pit.
That was a great analogy. How dare you?
And of course, for our listeners who are into audio fidelity, this will certainly be a treat for them. We have half of our guests coming in via speakerphone. We have Uncle Mike having Skype issues. It'll be an audio cornucopia, I suppose you can call it, of different sounds for their listening pleasure.
I'm getting a new mic this week, so you'll be really excited.
I'm looking forward to it.
I got a really nice one with a popper, the whole nine yards.
Wow, you're gonna be sound better than me, sir. It'll be interesting. Uncle Mike, before we go from the trading block, we did start off diving into the whole Google MMI thing. You have anything to add there before we close out the old trading block?
Nothing that I'm willing to bet hasn't been added already.
No colorful analogies on that end, sir.
No, I do not. I'm sorry.
All right, then. And with that, we're going to close out the old trading block.
The interview block.
And welcome to the interview block. This is indeed the portion of the show where we drag some poor soul from the world and options, kicking and screaming, onto the program. And today we are joined by Russell Rhoads. He is an instructor over there at the Options Institute at the CBOE, and he's just launched, coincidentally, a new book entitled Trading VIX Derivatives, so it's perfect timing for him to come on our program. Russell, welcome to the show.
Oh, thanks for having me. I appreciate you guys spending the time with me as well.
And Russell, since this is your first time on the program and indeed your first time on the Options Insider Radio Network, let's kick things off with you giving our audience a little bit of a brief overview of your background in the options market.
Sure. Well, I'll kind of work backwards, which is the easiest way to do things. I've been with the Options Institute at the CBOE for about 3 years now. Back in 2008, not a forced retirement, kind of a choice to get more into education and trade a little bit less, kind of a quality of life decision there, which came pretty easily in 2008.
What, you wanted to sleep and do all these other fun things and see your family and whatnot?
Exactly. You know, I'm a much happier person now. But the way this job came about for me was I had experience trading. I'd been trading either with a firm or for myself for about 17 years or so. On the side, I'd actually started working with Wiley as a technical editor for some of the For Dummies books. I think 4 of the For Dummies books, if you really look hard, you can find my name as the technical editor. And then I actually wrote candlestick charting for dummies before I started here, so I understood the markets, apparently I understood how to write, and the exchange brought me on to work at the Options Institute to basically do nothing but create course content. And they said maybe once a month or so, maybe they would put me in front of people. This week, we're talking on a Monday. This week, I think I'm scheduled to speak in front of people 14 times. So something changed as far as my job goes. Since I was relatively new 3 years ago, and the VIX was still starting to emerge as a new trading instrument, I focused in on the VIX. You know, this job and that focus is how the book came about, actually.
You'd be amazed how small that Venn diagram of people who both can trade and understand options and can also write about them. As someone who's run an online content destination for a number of years and worked with contributors all over the options realm, the number of people who can do both are very few indeed.
Yeah, I always like to joke with Russell that he is nobody understands the VIX more than him that's willing to talk about it. I'll take the compliment and run with it.
So, I imagine, like I said, given your work with the CBOE these days, a lot of their focus is on the VIX, and obviously your book just came out also is VIX-focused. So tell us a little bit then. You said you have 14 seminars coming up this week. Are they all VIX-related? Are you sitting down with institutional or sitting down with retail and kind of walking them through the overview of VIX, or what is the bulk of your day entail over there these days?
You know, the things that we speak on here at the Institute, my day can run from spending 30 minutes with grade school kids trying to explain to them what an option is to, people that are high up with regulatory bodies from places around the world. So it can jump all over the place. Mark Sebastian and I are going to do a webinar for the CBOE talking about the VIX later this afternoon. Recording of that will be available on our website. Doing something out in Portland, Oregon, where I'm going to be in front of a group of individual investors. I'm doing 4 presentations out there. One of them is going to be on the VIX. The other 3 will be on, I think, index options, covered calls, and one's going to be on spread trading as well. And then I've got a handful of webinars with a variety of brokerage firms just on mostly on non-VIX topics. We've got an on-site class on Thursday and Friday. I'm only going to be in Chicago on Friday, where I'm teaching 4 or 5 class periods on just the intro to options. It's our level 1 class that we're having this Thursday and Friday. So it really is a wide variety of topics that I get to speak on.
Hi, Russell. My name is Tim Navabi. I'm a broker here at Options Express. Nice to meet you. How are you?
Doing okay. Good to talk to you.
That's good. Thank you very much. Russell, I take a lot of phone calls from individuals who will be trading VIX, VIX options, the VXX stock, or equity index, in addition to the VXX options. What do you think is probably the biggest misconception maybe with those? And kind of now as I state that, I realize there's probably a few, and it's probably a big question. But I mean, what would you like sort of a beginner to take away if they listen to you and they want to trade the VIX? I mean, what would be one of your bigger pieces of advice?
Well, the first thing that I always start out with, and this is in any, I've done some VIX presentations for you guys, and I always start with at least a 5-slide overview of exactly what the VIX is, and I always talk about the disconnect between the tradable instruments and the actual VIX index. One of the things or unusual things about the VIX index is it's not like the S&P 500 index, where if you have the wherewithal, you can actually the stocks and replicate owning the S&P 500 index. You really can't buy a basket of securities and replicate the performance of the VIX index. Therefore, we have to take a look at some of those other instruments. The fact that the VIX futures trade at a discount or a premium, most often a premium to the VIX index, is something that I often point out. You can be dead right that you think the VIX index is going to move higher over or so, but if the futures are already discounting that opinion, you might actually end up with a losing trade, even though you were right about the index. So you need to be aware of that discount and premium that exists from time to time. That discount and premium also translates over to the spot VIX index options. One of the things I think scares individuals away from trading the VIX right off the bat is taking a look at an index option quote on VIX index options, and they immediately appear to be mispriced. Educating people on how they're priced is definitely something that that I'm always working toward. And then finally, you mentioned the VXX. I have to tread lightly because I'm in education and not giving opinions. Looking at how the VXX is, just like the VIX futures, the VXX doesn't necessarily mirror what the VIX is doing from day to day, and being aware of the indices of that product, that's just another thing that I always try to point out to people.
Okay. So if you don't mind me summarizing that, it would be number one, know what it is exactly that you are trading. And, I know that sounds kind of goofy to say, but for the most part, we do have a lot of customers who say, hey, I thought I was trading volatility. Now I don't, volatility went up and, I'm losing money, and that's, I bought calls and all this sort of stuff. So, number one, it's really sort of know what you're trading, the instrument, the option, and maybe why they're priced that way or what they're being priced from. Would you kind of agree with that, or?
Oh, absolutely. And it's what you said, know what you're trading. With the VIX, I think, like you said, it sounds like a silly statement when it comes out of your mouth, but I do think that is a statement that applies to when you're thinking about trading any instruments that derive their value from the VIX index.
I always like to joke that any index where in order to figure out the expiration, you have to go to a spreadsheet online. It's gonna there's a little bit to it. So you want to speak a little bit to, about the VIX options. Can you kind of go through this concept of vol and, maybe speak for a minute or two about, what makes VIX options move, and as VIX value's gone up, have the options behaved in this let's call it interesting last couple of days?
Well, in the past few days, the VIX options haven't. I think, just to be clear, we're talking. We're going to be talking about the call options to the upside. You haven't necessarily seen, with the VIX at 48 one day last week, you didn't necessarily see, the September, November, December VIX options at values that you would expect with the underlying up at 48, and that's because the futures didn't, the futures that far out were anticipating a reversion to the mean, which is what we often see with volatility. The nearer term VIX option contracts, the August calls, which expire in the next couple of, actually, about a day and a half. Well, a little over a day from actually
a day and a week.
It's after 3. A day. No, it's we've got. I thought Mark was saying a day and a week.
A day and a wake up.
A day and a wake up was what he was actually saying. But the August VIX futures didn't nearly run up nearly as much as the VIX index did, and now they're kind of the VIX index has come back off pretty dramatically. It's down 17 points off its high in less than a week, basically neck and neck with the futures contracts, and the options are priced appear to have prices that are normal relative to the VIX index, I guess, right now. But another thing that we actually noted in some of those out-of-the-money VIX option contracts was we did see an increase in the implied volatility on those contracts as well, as people were trying to, we're getting a little bit concerned about the S&P, maybe thinking we were going to have another leg down like we did a couple of times last week. You did see the implied volatility on the out-of-the-money calls increasing dramatically. That the VIX going up is when the implied volatility is getting pumped up because of demand from S&P 500 puts. That implied volatility of the VIX options is something you definitely have to take into account, as well as that perceived mispricing of the option contracts relative to the VIX index.
Getting to your book, what are a couple of the things I know that the beginning of the book really gets into what is the VIX, just like you and anybody else. You get into what are some other things that people can take? Like, let's say I want to learn how to trade speculatively, or I want to learn how to trade delta neutral, or to use the VIX product as a hedge. Is this a good place to start, a good place to finish? Who should be reading your book?
Okay. Well, it's definitely, in fact, the first review I read on the book, they sent me an email and they were being a little apologetic because they felt like they indicated in the review that it was more for intermediate than beginner traders. Well, it is an intermediate level book. This is definitely not a product for beginner option trade, people that are starting out in options trading. It's experienced intermediate to higher level individual traders, and then definitely institutional traders that are taking a look at using the VIX either as a speculative or hedging product. The book's very appropriate for both those types of traders. There's a full chapter that is basically that talks about hedging with VIX derivatives. I talk about the UMass study. My understanding is there's another study that's come out recently that I just got emailed to me today that I want to take a look at that talks about using VIX options and futures as well as a hedging vehicle. I talk about what would happen if you've been using a consistent position in the futures or options in a portfolio context, and then if you use them opportunistically. Talk about also, and this is kind of an area that I like because it matches up with my background, which involved being a technical analyst and trading financial futures. I like the way you can use the VIX and VIX futures relative to the VIX index as kind of a stock market indicator. And I do spend about a chapter and a half on that as well. And then I put, I think for individuals that are starting out, I think taking a look at how the VIX futures contracts are priced against each other from time to time and seeing how you can try to take advantage of that and how that pricing changes as those futures contracts approach expiration, as they go from being the third or fourth month out to the front month and the second month out. Taking a look at how to trade those with futures as well as using a couple of different option strategies. I think that might be for individuals one of the more useful things that you can get out of the book.
Now, Russell, you mentioned using the VIX as an indicator, and that is indeed one of the reasons why it is so popular. But we also see a lot of people rushing to VIX and embracing it and perhaps conflating it as this perfect inverse to the S&P and this perfect hedge, and a lot of people rush to the VIX to use it just for that reason, as a downside hedge to their portfolio. So I guess the question for that is twofold. A, what do you say to people when these classes and students, when they come up to you and ask you about the VIX as a hedge, is it the perfect hedge that they want it to be, and what do you respond to them when they ask you that? And B, when people ask you, should they be using VIX in lieu of, let's say, an S&P downside put to hedge that portfolio, where do you fall on that debate as well?
I kind of fall, and I'm going to sound like I'm being a politician here, because I kind of fall. I can make a justification for either side of that. Let me start with, I'll start with your first point there as far as the VIX being a perfect hedge. The inverse relationship, I think about 3/4 of days when the S&P goes down, the VIX futures go up or down. I like to use the futures when I do those sort of studies because that's the actual tradable vehicle. It's not necessarily a perfect hedge. The first class that Mark and I did together on trading the VIX, there was a really smart guy that had a lot of, I think he'd been saving up questions for 6 months to come to the class. And one of the things that he pointed out was if we have a grind lower where the market's down, 0.25%, 3 out of 4 days and flat that fourth day, that using VIX derivatives is some sort of hedge, because you're not going to get that emotional or that behavioral finance thing where people are rushing into put options to hedge themselves if we get a grind lower. VIX calls or a long position in VIX futures might not work as well as a hedging vehicle as they would in cases like we had last week with the market dropping dramatically. They're a better hedging vehicle when you see the market drop 2-3% plus. That's when you really get the bang for your buck on using either out-of-the-money VIX calls or a long position in the VIX futures. In the book, I actually do a comparison of different scenarios with either using S&P 500 put options as a hedge for a downside move, or just using some historical relationships, buying out-of-the-money VIX calls. And it really is dependent on, what the volatility is of either going into whatever quick downdraft that you're going to see, and the nature of that down move that you get. So it's one of those things that I'm not going to say absolutely every time we get a big move to the downside, the S&P's puts are going to be better or the VIX calls are going to be better. It really does depend on what's being priced in ahead of time. This past move, 3-4 weeks ago, we had the VIX at 16, and the futures were not at that much of a premium. From this point here, I don't think you could get the same type of protection at this time.
Yeah,
it's situational, and it can be either or.
Do you think that VIX that it makes a lot of sense to be using VIX futures and VIX options when the VIX is actually already at 40, or like when would you if you're picking when should traders use the VIX if they're trying to employ some sort of thought process to the strategy?
If you're and we've seen these opportunities pop up every 2 or 3 times a year, with the exception of 2008, since the VIX has been a tradable vehicle. But when you get the VIX in that at that level that we had when there was complacency around last spring, that's when you can shop around for some cheap portfolio insurance 6 months out or so.
Yeah.
That's old axiom. It's almost as silly as when we said know what you're trading, but buying low and selling high. When everything's calm in the world, look out to look a few months out and see if there's some out of the money call options that are relatively cheap. A couple of years ago, just before the flash crash, I know that there were some August calls that were trading well under $1 that went up tenfold with the move that we got around the flash crash. So things were very cheap right before that, and I think that's where you can get, that's when you want to be taking a look at maybe just putting something on that might help you out if we get some sort of outlier move, which it seems like we get an outlier move about every 6 months.
Yeah, outlier seem like outlierish for some reason.
Just about when they appear to be, when the VIX starts to reflect that it's not going to happen again, that's when you prepare for it to happen again, I guess.
Yeah, this is Mike Tusa here. We do a lot of hedging with our portfolios at Know Your Options, and we've wrestled with, should we start using VIX options as a hedge? And our position on it is that, yes, there is the inverse movement a lot of times on it. And so as a trading instrument, we kind of view it as kind of like as a pairs trade type of thing. So let's say that we're bullish on the S&P and we want to protect ourselves. And maybe perhaps as a short-term trade, we may consider buying a call option on SPY or the SPX or something along those lines, and then deepen the money, or maybe even using a futures contract or something along those lines, and using the VIX as some type of a short-term protection. Just because of the fact that you're right, it can give you a pretty nice bang for your buck if you are correct on it. For the long term, though, the gentleman that you were referring to that was asking the good questions, I'm in total agreement with him in that if we do have a grind down, or if for some reason the stock market and the VIX do not match, then you need to be very careful. Because if you're trying to hedge your big money, your nest egg, and I'm not talking about your trading account, but your nest egg, then I think it's very important that if you're doing stuff with the S&P 500, you need to be using options on SPX or SPY or XSP, whatever the...
Mike, I've actually found that there are times where one makes more sense than the other. For instance, and Russell, stop me if I'm telling stories outside of school, but when VIX is low, but the skew index is kind of high, which is another new product from the CBOE, I found that using VIX may be the cheaper way. But when you've got low VIX, low skew index, SPX, I think the key is, then again, you're running millions of dollars worth of clients. You don't have time to sit there and analyze. But for the self-directed trader, I mean, is that kind of what your thought process is? It's find what's cheap? Is that?
Yeah, I mean, just we're talking about it, using the term hedging, but I mean, there is a speculative thing there. If the VIX is down in the teens and you're looking out and the curve of VIX futures is pretty flat, not really looking for much of a move over the next 3 to 6 months, the cycle of volatility explosions that we've seen over the last 3 years, it seems like you've had opportunities to buy some out-of-the-money VIX calls, whether that's, to hedge against a down move in a portfolio or to, speculate on, these little bursts of volatility have not gone away yet. You can take it either way.
Well, and I think one other important point is that unlike S&P 500 options, where once the S&P drops, it can stay there for a while, once a VIX hedge works, Russell, what do? Because you have to get out or do something with it, right? Even more than SPX?
Yeah. I mean, definitely. That's another you need to. At the Options Institute, especially when we're teaching individuals at the beginner level, we always we show a covered call and we show what happens at expiration. We don't start out talking about the shorter term trading in and out of things. With the VIX options, and this is the hard part, sometimes is knowing when to take these things off. If you're going to benefit from those bursts, the volatility flashes that we get every once in a while, you definitely need to, be pretty dynamic about those things.
So, well, Russell, I know we can all sit here and talk about the VIX for quite a while, but we do have to move on. But before we do, I wanted to give you one last chance to plug your book and maybe also mention any other things that we haven't brought up today that you think would be interesting to our audience, any events you have coming up or any particular ideas you have about where we are right now in the market or anything that comes to mind at all.
Okay, well, I like my job, and I'm not supposed to give market opinions, so I like my job right now.
Yeah, I'll make one up for him if you want.
Yeah, that's why Mark's sitting here.
Yeah.
In case, but we do have Mark and I are going to be spending a Saturday at the CBOE. Can't think of a better way to spend a Saturday than at the CBOE.
That's what I always said. Especially when I was leaving on Fridays. I'd say, I can't wait to come back tomorrow.
Well, but Saturday, September 10th, we're going to do a class at the CBOE. And this would be appropriate for people that don't have a lot of experience trading the VIX. Because in fact, Mark doesn't even show up for the first hour or so because it's all beginner stuff on, this is the VIX, this is how the VIX is
That's
calculated.
A huge selling point then, just to pump that one.
Yeah, that probably does work a little bit. And then we are considering, before we got on with you guys, we were actually considering and I'd give it about an 80% shot. We're probably going to try to do a VIX-related class, an all-day Saturday class in the New York City area before the year is over with. Just the same thing, but we get some interest from over there. The VIX class that we're going to do here, you can watch it on the webcast as well. You get a copy of my book. If you've already got a copy of my book, we'll swap it out for something else because we've got a couple other books that we give away for classes here. And you get a manual on how to trade the VIX, and I think you get a cool trading badge or something like that as well. 8 hours of getting to listen to me and Mark.
And I'll get some expiring monthly swag and some option pit stuff as well.
But yeah, Saturday, September 10th, we're going to have a class at the CBOE.
Yeah, tell you what, if you sign up and tell them that that you heard about this on Option Insider Radio, I'll send you a really cool Option Pit coffee mug.
Wow.
That it's like super like a car mug from Option Pit, and it's got our logo on it. It's really cool looking. It's pretty slick. So if you say that you heard about it on Option Insider Radio, I'll send you an Option Pit coffee mug.
That mug has a big, glossy, shrunk down 8x10 of you on the back. I think you just sold quite a few mugs, sir.
Yeah, no, well, that's mug shop. A little different.
All right, and thank you for that. Thank you for coming on and joining us today. Russell, we'll definitely have to bring you on again down the road. And that is going to do it for the interview block.
Around the block.
And welcome to Around the Block. This is indeed the portion of the show where we discuss what's coming up on the horizon for the next few sessions. And obviously the big news today was, of course, the acquisition of MMI. So people are looking for the next big acquisition in the weeds. And so we saw a lot of that activity in names like RIMM and Nokia today where people were looking to follow suit. Go ahead, Mark.
Who's buying RIMM? Who's a good fit for... that would be an interesting one.
I mean, Nokia makes sense. They're obviously ridiculously cheap, so it's a cheap flyer for people to spec on that one. But RIMM, I mean...
I've heard multiple times that Microsoft might be a potential buyer of RIMM because of some of the proprietary technology that RIMM has that would kind of get Microsoft caught up in that space.
Well,
that's the only hypothetical I've heard thrown out there. So
all right.
Take that and research it.
Who would buy RIMM? I guess Microsoft would make some sense. They've been a big buyer of Skype. They want to get into the mobile thing. The Nokia, their Windows 7 phone is not doing that well. If you took, I guess the thought would be that some good technology with some bad technology, and then some good with technology with some bad could be maybe combined to, if they could get that to work the right way, it might be a good fit there. I'm looking at the housing stuff. I think that's really what's going to matter. That's kind of where I'm coming from. That's kind of what I'm looking at. And keep an eye on Europe. The euro got, in my opinion, way overbought today and was a screaming sale when it got to 144. The euro is not worth $1.44. It isn't, okay? If I went to Europe and they offered me an exchange rate, I'd walk up the stores and say, no. My exchange rate is $1.35, and you'll take it. And they would do it. That's how strongly I feel the euro's overpriced.
Of course, what Mr. Sebastian is alluding to is that we do have housing start numbers coming out tomorrow, and that is what a lot of, I think, the near-term focus of the market is on, as well as the old jobless claims coming up on, the 18th, Thursday, so that we'll see if that can move the market as significantly as it has in recent weeks. And I think it's interesting talking about who would buy RIMM because, those names these days, they're becoming less of a fundamental play and less of even a technology play as much as they are a patent play at this point. I mean, we saw Google essentially scooping up MMI for the patents to defend themselves against Apple and Microsoft, who gobbled up the Nortel patents a few weeks ago. And we saw Google making a kind of a half-hearted attempt to buy up the Nortel patents, making bids like in the number pi, 3.14 billion, and things like that, and making kind of absurd bids, and then getting beaten out by Apple and this consortium who bought those patents, and now turning around and doubling down on MMI, if in many ways a defensive move, I think, on their part. Uncle Mike, what are you watching for the next few sessions, sir?
Next couple of days, I'm looking at gold. If we make all-time highs again, I'm actually going to not for any of the long-term clients, but I'm actually becoming a gold bull if we make new highs. I think oil, like I was saying earlier, we're at technical levels right now to where I think today may have been a buying opportunity. 1,200, that's also a magic number on the S&P. So I think that tomorrow is going to be a pretty key day to see if we can hold the close over 1,200, or is that going to act as resistance? So far in the aftermarket, the E-mini's down about a point, right? It's down 0.75 right now. So the market really isn't doing too much at this stage, but nonetheless, I think we have a lot of key levels right now and some broad-based things.
Don't let Sebastian hear you coming out those gold bull comments. And then, Mr. Navabi, what are you watching around the block over in the world of Options Express, sir?
I don't know if you mentioned or not, we do have PPI and CPI this week. Something else I always get reminded around this time of the year is the slowness that's coming along. I feel it will be in here anytime soon. I know that, there's really a lot of expectations for the market to start moving, big in one direction or the other. But, this is the end of the summer. I know that, a lot of people want to spend as much time with their family. So, we always have a tendency to see, trading start to get slow, moves get a little bit, extended or, overextended. So, I'm just kind of waiting for the market to just or the volume to just kind of slow down here. And then it'll pick back up, right after Labor Day. So sorry, I don't have anything more interesting. You were mentioning the, who's going to buy RIMM or, Nokia, all those types of things. One thing I kind of kept in the back of my head was that Hulu news was, Hulu was, I think, getting priced or speaking to, a group confidentially. And I'm wondering, if something's going to come along here by the end of the summer with that. So.
Yeah, there has been a lot of talk of who's going to gobble up the online content people. The joke was Apple for a little while there, even though it didn't really make a heck of a lot of sense. I think a lot of people have kicked the tires at Hulu, and they've come away thinking that the licensing deals they have are they're just too restrictive, and they're not really. If you buy Hulu, you're not really getting that much beyond a few years because a lot of their deals run out and a few other things happen and these covenants kick in, and you're really not getting much except an online portal and a handful of titles. So I'm not sure if anyone's really going to want that. I'm not sure if their tech is really that fancy. I don't think Hulu really has figured out what the heck their business model should be, even because they have the Hulu free version, they have the Hulu Plus, but you still get ads. It's a strange mix they have going on there. And speaking of acquisitions, we're just looking through some news while we're talking, and people are speculating now that one of the reasons MMI was holding so strong in recent sessions, and Uncle Mike, you remember we discussed it as kind of an odd outlier on recent shows because it was holding up surprisingly well given the worst days of the market over the past few weeks. And there's talk now that other firms are coming in and kicking the tires at MMI over the past few weeks, like HP and Dell, and maybe some of their staffers were picking up MMI as well. Whoever was in there kicking the tires, it sounded like the news was held about as well as a sieve, because that stock certainly held up, and this still managed to surprise a few people to the upside today, I think, given what was going on with that skew. And if you look at news and you search for MMI even today, you look at some of the news going into Friday, people were suggesting writing calls on MMI and call spreads and some covered calls as well, just because the upside skew was surprising a lot of people that it was holding in so well. It was an interesting one to watch, and I think a lot of people who followed that news, if they did indeed do it last week, they probably got bit today given this gap up on Monday. But yeah, a lot of interesting stuff going on in the tech realm, and a lot to watch tomorrow with the old housing starts tomorrow, as well as jobless claims on Thursday. All right, and that's going to do it for the Around the Block segment. That's also going to do it for this episode of the Option Block. I want to thank all of my cohorts for joining me on the show today, starting off with Mr. Sebastian, who had to run, but we want to thank him for bringing on Mr. Russell Rhoads onto the show today, and I encourage all of our listeners to take him up on that offer and pick up those classes and indeed get that free Option Pit mug. Just surf on over to optionpit.com and you can find out more information about all of Mark's special offers and deals and classes going on. And Mr. Tusaw, the man from the mountains, what is coming up over at Know Your Options Inc., sir?
We got spread trading for sophomores this Monday night. So we'll be talking about multi-leg spread trades in our weekly webinar. We're excited. Come on out, and we'll probably be going back to Sunday night webinars once the fall goes. They tell me that there's some sport that plays on Monday night during the fall season. I forget what it's called. I don't know. It's a
is that the figure skating championships? I heard that's pretty big.
Yeah, something like that. I don't know. So, but yeah, we will be doing our spread trade webinar this weekend. This coming Monday night. So stop on by. We'd love to have you.
And Mr. T-Knob, what is coming up in the land of Options Express, sir?
Okay, we have a workshop in Boston on August 27th from 8 a.m. to 4 p.m. It's a free workshop. As far as the webinars are concerned, what we've got coming up shortly here, creating a trade plan, long call from beginning to the end, part 1. That's on 8/17. Same day, just after that one, long call from an idea to a trade, part 2. That's also on the 17th.
Good old long call webinars. Can never have too many of those, sir. All right, and that is going to do it for this episode of the Option Block. I want to thank all of our listeners out there for downloading and streaming and subscribing to this show and making it such a success, and indeed propelling our new feed up into the new and noteworthy section of iTunes, where if you want to find it, you can subscribe just to this show, which makes it a lot easier for newcomers to the show to find it, which is always fun. Thanks again for listening, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting, and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.